Bell Equipment manufactures and distributes mining and agricultural capital equipment from factories in Germany and Richards Bay.
Yep, so Bell also quite visible in the industry. It was started by a family called the Bell family down in that Richards Bay area, and they started in the sugar business and then they expanded over time. It's had a choppy couple of years.
Rights issue.
Bailout from the IDC, so on and so forth, but it does seem to be back on its feet, although again, the same environment that we've been talking about all the way from the top of the show affects them very dearly.
Market cap 999 million rand, price to earnings ratio of 6.3 and no dividend yield. Where do we stand on this one, having come out of the bailout with the IDC?
And of course, I think the shareholders, the family put in more money as well in an unsecured loan. But look, anyone who's in investments who wants to study an industrial company, how they react to bad times, should do a case study on Bell. They've had to change their business to react to bad times, and they've come up with very innovative ways of doing it.
They are still standing.
Oh yeah, very much so. And they're such a big employee in Richards Bay, they actually introduced job sharing so they didn't have to fire 2,000 people. You earned less, but you still had a job, you still had income. So now, it's very interesting on Bell. Whenever you read their things, it's exactly the same. Tough times, we're battling, there, we're battling everywhere. But they actually state quite clearly, we've got our costs under control, we've got our unit cost under control, we still manufacture a high quality product. They actually were very proud of their achievements, and justifiably so on their manufacturing side. You know, for a small South African company, they're competing with Caterpillar, effectively. I mean, that's not quite in the massive scale and the massive diversification of product, but they are competitive. So it's once again a cyclical company.
1 billion rand. There or thereabouts makes it big enough for you to look at.
Only just, but it was 999, did you not notice?
I was just rounding it up. I was going for the 1 billion rand
well,
factor.
you know, 1 million rand short, I'm sorry.
So do we just brush over this one?
No, look, the articulated dump truck, which Wayne is referring to, it was a design which they developed which competes with the best in the world. They had a joint venture with John Deere, or just Deere is the international company, which still owns a 30-something% stake in the business, even though Deere then decided to go off and do their own thing and compete. But you're right, manufacturing in Richards Bay and in Germany, both of which are sort of world-class facilities apparently.
Competing with the heavyweights.
Share chart, though, will reveal, you know, that's where it got tricky, you know, down there in the depths.
But to be fair, we're seeing this pattern with all the players in this environment. So there's contagion in the capital equipment space.
Bell's also got the operations in the US that they're doing quite well there. You know, the weaker rand helps them tremendously on import protection, but it actually hurts their global businesses. So fairly neutral on the rand. Look, I think it's a fantastic company, but I'd rather own Barlow's than this.
Does that mean not hot?
Trade, not hot in this one.
You think it's a fantastic company, rather own Barlow, not hot?
Yeah, look, it sounds a bit contradictory. It's a fantastic company in the way that it's run, but I wouldn't necessarily buy the share. I'd rather buy the Barlow share.
Hot or not, Paul?
And you know, good times will come again. It's just that we don't really know what that is. Maybe it'll be the sort of accelerated industrialization of India. You know, like in 1998, people didn't see China coming either. So it's going to be when the world is booming and agricultural prices are rising and so on. But
what's
for now,
the PE on Bell?
You must have said it there earlier.
I know, just remind me.
I can't remember now.
What was it? The PE
it must be super low,
6.2.
There you go.
No dividends.
6.3. 6.3.
And in fact, in prior periods, it had losses and so on. So that reflects that it's now profitable again, not paying any dividends, obviously, but it's kind of getting back on its feet.
You said not hot.
Not hot, no.